Investors and traders, welcome to the channel Market Chart Pattern. Today is 2nd of June 2024. Hope everyone is having a great weekend. In this video, we will be taking a look at the financial ETFs and key banking stocks for the United States market. As always, this video is for educational purposes only and it's not a financial advice. So we'll start by taking a look at the KRE index, which is the Spider S&P Regional Banking ETF. This is the weekly chart. So what we can see is that this market has been stuck in a trailing range for quite a long time. Pretty much since the beginning of February, it's just retraced about 50% of the CD leg and just gone nowhere. So it remains a trading range. However, this range is supported by this point here, which is 50% retracement around $46 per share. And because of this point still being active, the chances are we are in this ABCD pattern higher, which could eventually see this the price reach about $62. But the longer it stays in this trading range, we'll have to eventually see how these moving averages catch up, because what we see is that the price is still below the 200-week moving average and also below the 89 period moving average and also right at the 20 period moving average. So the momentum, if it begins to wane from here, then chances for a downward move can happen. But look at this trend line here. It's the price is also so far rejecting this trend line here as well, the one in the blue, and remains supported by this trend line here. So we have a number of things here which actually is suggesting that this point C is active, and we can in fact see higher prices. But with this kind of a trading range, one has to be really patient, and sometimes it is a pretty difficult thing to do. Now let's take a look at the XLF. This is the weekly chart of the Spider Select Sector Fund, and you can see here the price action on this weekly chart is totally different to KRE. So this is why investors who want to take an exposure for the financial stocks through perhaps an ETF need to be very careful in what they are actually selecting. And even for the banking ETFs, there are a number of ETFs available, but you should actually look at the composition, because the XLF has a composition in which there are really big banks such as JP Morgan, Goldman Sachs, Bank of America, American Express, and also Berkshire Hathaway, Visa, and MasterCard, which you might not have in the other indices. And these stocks are performing differently in this environment, and that's why we see the XLF actually being pretty strong. So here what we see on the weekly chart is the shorter term target is around the 43, and then above that we have 44 to 45 is most likely where it is going to go shorter term. Now we did see a pullback last week, and it came pretty close to the 20 period moving average, but the momentum still remains pretty strong as the 20 period is above 200 and also above the 89. So the chances are we are in this ABCD in the blue, and in fact see the price as high as 49 to 50. And the other thing is, just going back to the history a little bit, let me actually try making it like this. If we go back to this time period of 2007 to 2008, excuse me, 2009, when the market actually bottomed, and if we just do an expansion of this range, then we get about 47 as the 1.618 expansion. So this is why if the stock gets into the range of this 47 to 49, and we also have this smaller ABCD completing around that region, that region or that zone might actually be a pretty strong resistance level, but the market is nowhere near that at the moment. So just wanted to bring that out, throw it out, that this is what we'll be really watching very carefully. So for now, shorter term 43, 44 to 45, and maybe as high as 49 to $50 per share looks like where this market wants to go remains very well supported from the momentum perspective. Now let's take a look at some of the individual stocks. This is stock of Goldman Sachs. Now the Goldman Sachs stock actually reached our target. So what you see drawn over here in the blue is the 1.272 expansion of this swing high to this swing low, and then we also had the 1.618 extension of this swing low to this swing high projected from this point. So this is point A, point B, point C, and the point D is actually extended. So normally we take a look at the projection being AB equals CD or 1 to 1, but this one actually extended to 1.618. And we have seen after reaching this target a couple of weeks of a pullback, and in this market rising in the near term since 20 since when around here April, this is what the correction was. And if we just try to project it from here, the pullback has a chance. Maybe it can go a little bit further down to 436, and the structural support comes around 420 from the structure of this structure here, a little bit of this structure here, and the 382 on this entire swing low to high is around 400. But I don't think we'll go as low as 400. Most likely, 440 might be the kind of reasonable target for a further pullback if that happens. And if the market remains strong and we are able to get above the 473 on a weekly closing basis, the 1.618 expansion comes around 420, and that will be the target to watch. Now let's take a look at the JP Morgan. It's the weekly chart of JP Morgan. JP Morgan completed a big ABCD around here, and that was in the month of March. There was a bit of a pullback, and then the market actually rallied, and it's just trading sideways as of last couple of weeks. Now the CEO Jamie Dimon of JP Morgan, he has actually come out in public and is suggesting that retirement is closer for him, and he actually also sold some of his stock in JP Morgan, and I believe some of these pullbacks here were related to perhaps that news as well. But from a technical perspective, we already have this big ABC purple completed, but the momentum on the stock is really strong, and it's a really fantastic, really run company. So there's a chance we could actually go and hit this region, which is drawn in gray, which is also the 1.618 expansion of this BC swing, uh, around 216 to $220 per share level. And over there we could be completing an ABCD, more like a three drives to a top pattern possibly around here. So we'll have a number of things going on, and what I'm trying to say is that we could see a bigger pullback to take place, and the kind of pullback we had over here. And it could be just a number of things. Just that the CEO of the bank is actually talking about the stock, saying that okay, the price is really high and stuff like that. So we'll just wait and see. At the moment on the weekly chart, we don't really see any signs of distribution, but from a pattern perspective, we are reaching certain levels that we should be watching really carefully. So this is what we are doing, and some news is also coming out into the press, but we just watch the patterns, and the patterns are telling us to watch 216 to $220 per share level really carefully. Okay, now we will take a look at Bank of America. Bank of America, it's one of our favorite banking stocks, and here it's also pretty much there where our target is with $40 per share level. That's the 61.8% retracement of this swing high to the swing low. We have some smaller ABCDs also completing round about there. So the way to approach this is that if shorter term traders, swing traders, maybe they might take some profits, maybe close some positions if they have been long, and just watch what the price action will look like around here. But it is reaching our target that we had set out since the market actually began to rally around here. It broke out of the 38.2% retracement, so this was our next level to watch. um, Longer term, we are really bullish for this stock, but of course the 61.8% retracement could be a level which is really important, and we could see some pullback of some significance take place here. So we'll just be really watching very carefully as we get to the target of 61.8% retracement. We are pretty much there. The high was actually, it has made the $40 as the high last week, and the 61.8% retracement comes around 40, 43. So it's pretty much there on the target. So just let's just keep on watching this for further price action. Let's take a look at the Citigroup. So this one keeps on struggling right at the 61.8% retracement. It has had a very nice rally though since October of 2023, and here, yeah, price is still supported by momentum with 20 period weekly moving average above the 89, um, and also above the 200 week moving average as well. But it really needs to get above the 61.8% retracement, and you see these double top formations here. So these are signs of worry to me. Okay, so not too excited about this stock, to be very honest, um, but it's there right at the key technical level. Now let's take a look at Morgan Stanley. So the Morgan Stanley, it broke out of this wicked wedge formation, and the chances are that it might actually try to go and tackle these highs because of this potential ABCD, because it broke above the 78.6% retracement around the $94 mark. But it's finding difficult to move higher from this swing high. So there is certainly a selling which took place for the last couple of weeks. It really needs to get above this level for to complete and challenge these highs, or maybe even make a slightly higher highs. So those will be the new all-time highs. Um, so we'll just keep on watching. Maybe there is a little bit further um, correction that could in fact take the stock to around 93.50 level. Okay, and then we'll take a look at Wells Fargo. So here we go. Wells Fargo went right into this and closed this gap into this. Well, it hasn't fully closed the gap, but it went right into this gap around here, and it's just gone, trading range to down for last couple of last 3 weeks, in fact. The chances are it might actually be in this ABCD pattern higher, um, drawn in the purple, where it could actually go and tackle these all-time highs of 2018, and maybe even make new all-time highs. Um, and the key for this is that it should not fail from here. It should just find more bullish momentum to move higher. So really waiting for this stock. It's been a pretty remarkable recovery in this. The bearish symmetry was really strong in this stock all along right here, and all these rally attempts were actually failing, and then the stock managed to turn itself around, so that's pretty good. So this is what we are watching. We are right in the zone where there's really key resistance, which the stock needs to recover or cover and move out of to the upside to complete the ABCD. Otherwise we can see a move back into this trading range. So thank you very much for watching the video. Good luck to trading, and speak to you guys soon.